Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update podcast. This is Craig Jeffrey, your co-host today with Paul Galloway, who's a senior advisor at Strategic Treasurer. We are discussing 2022, the year in review. Welcome back to the podcast, Paul.
Thanks, Craig. Good to be here. What an exciting year we had. Ups and downs, all kinds of things happening.
And due to travel problems, due to weather, you are in Atlanta in our studio in Peachtree City. This is the first podcast I'm recording sitting at the new booth. This is exciting for us. Probably means nothing to everybody who's listening to this.
Yeah, no kidding. No, this is pretty cool. I really like the room. This is definitely a step up for us.
Let's begin with technology. What's going on with technology in 22? I'll start us off. One of the big things happening in the year is some of these acquisitions, private equity firms, acquiring companies. Thoma Bravo acquired Bottomline Technology some time ago, but recently acquired Coupa for $8 billion. I think that was just recently announced in December. So this ongoing expansion and spending of money by private equity firms in the broader treasury space. This is something that's a significant year for acquisitions, despite some of the headwinds in the general economy.
Yeah, I think that's absolutely right, Craig. I mean, PE shops have been sitting on the sidelines for some years prior to recent years with a lot of cash and looking for opportunities. And I think it's really telling that we're seeing in the treasury space, this investment by PE shops. It bodes well for the industry to see that. And they realize that there are returns available out there in our industry as we continue to grow and expand, and the demand for new technology by organizations that are looking at the way they do things or have done things for a long time and saying, hey, things have to change. How do we change that? And they're, approaching firms like ourselves to help them do that, and organizations that provide fintech that support not only their position today, but growth for the future. So you can set up these systems and organizations to grow along with them as they advance. So it's 5, 10, 15 years down the road, the technology is still there to support them, and it's growing with them along the way.
Well, just like private equity firms making the bet or the investment in some of these technology firms because the current trajectory, the prospective earnings they expect from these acquisitions, so too are corporate treasury groups, corporate finance areas, whether it's AP, AR, as well as Treasury. They're spending at an elevated level. That has not diminished through 2022. So there's been a period of multiple years where they're spending above trend line for Treasury technology. Payments is coming up again quite heavily. So we continue to see that through our surveys and through our relationships with companies. Spend is good. And so those two things go lockstep: investments in the space, spend by corporations on all kinds of treasury risk, transaction technology. So a couple areas there. The other thing on tech that I wanted to just point out briefly for the year in review, API use as well as machine learning continues to grow faster than was expected a year and 2 years ago. And this is one of the few areas that exceeds what people say when they take surveys. Usually there's a discount off it. People who listen to this podcast have heard us say this a number of times, so I don't want to belabor it, but there's faster adoption than expected. It's almost always a discount on the expectation. So that's another area on tech. Anything else on tech before we move on to the next topic?
No, I don't think so, Craig. I think you pointed out some really important aspects in terms of what we've seen in 2022. I can remember with APIs, it was a conversation 4 or 5 years ago. And today it's really become reality. Banks, fintech providers are embracing it, and corporate treasury units, AP, AR, they're expecting the APIs are going to be utilized, as well as machine learning, the AI technology. That's becoming more and more important.
It's being used, like you're saying, banks are offering it, technology firms are offering it. So through the platforms, through the portals that exist, they're being able to adopt it. They're adopted more rapidly. I think that's been the leading cause for the faster adoption, these API first or API enabled platforms. The other thing that's happening very much on the edge, there are companies, it's more the tip of the curve, companies that are becoming API orchestrated companies where they don't want to just pass files around. They'd rather have APIs be part of their orchestrated messaging, communication, and updates through their internal systems. And so there's a shift there. I think we're very early on that. We don't see that commonly, but we see that with some, I'll call it tech leaders. So I think we're in the first year of where that's becoming much more prevalent. I mean, companies have had API gateways for some time. All right, let's shift to war and supply chain. There's a war in Europe. Russia's brutal attack on Ukraine, Ukraine's strong battle back. This is a real significant event for treasuries in a number of areas, let alone the humanitarian geopolitical aspects. What should we think about from a review perspective there?
What's really interesting about this is that Russia went into this conflict expecting that Ukraine was just going to fold, and that's not what's happened at all. In addition, I don't believe that Russia expected that they were going to get the support that they've been getting from the West necessarily. Yeah, they've done things to try to deter that. There's been quite a bit of saber rattling in recent weeks around the use or potential use of nuclear weapons if pushed far enough along. That's definitely something you don't want to hear. I don't think anybody really wants to use those, but you never know, and you got to take that with a grain of salt. But it's had a significant impact on Europe, and we're going into the winter months, and supply chain for fuel has changed, has been disrupted because they relied on fuel from Russia for many of the countries in Eastern Europe or Western Europe. So I think this disruption definitely is going to be a challenge for them as they continue to go through the winter months.
You mentioned fuel. Obviously, there was the energy impact on fertilizer. The impact on transportation has been significant. And you talked about the winter, and obviously there's the issue of, are people going to freeze somewhere? Maybe that's not an obvious issue. I think there's been quite a bit, particularly in the Eurozone, countries planning for that, trying to conserve, store, prepare for those things. There's been, cutting of old growth forests to, use things like wood for energy. So I think that's going to be a fairly impactful event for planning. The use of nuclear, is that going to come back as a more sustainable, less dependent on other suppliers, particularly countries like Russia or Iran in that case. A couple pieces on the fuel. I would love to hear an economist who keeps track of the use of fuel, of energy, how that changes during economic slowdowns. I think we, as a globe, we use just under 100 million barrels a day, somewhere in the 97, 98 range. The U.S. has shifted from not too many years ago being a net provider, to a net user. Since the end of last year, the U.S. has released, I think it's about 250 million barrels out of the Strategic Petroleum Reserve, the Strategic Reserve, largely to keep prices down, not because of, an impact, but that has to let up, or it is letting up. It has to let up. We're past midterms, past runoff elections, and there's not a lot to be released. It's fairly dangerously low. So replacing that's going to cost a lot. That has kept price pressures down in the U.S. 1 million a day. I think we were short 3 or 4 million a day. This provided, or having to import, and this provided 1 million a day. Is that going to rebound and cause a great increase, since we're stopping the release? The U.S. is stopping the release right before winter, where there might be some heavy uses of it. I don't know all the factors there, but those are things I'd love to hear from economists who look at that.
On the outside looking in, when you start reducing supply, prices have got to go up as demand's going up for it. There's just no two ways around it. So I expect that we'll probably see an increase in prices. As you said, I'd like to hear what economists are thinking. I imagine they're thinking along those lines, but it would be good to hear that. One of the other things that came out of, and we really didn't hit on front end, we hit on energy. One of the other pieces that was an issue as well, it was around getting grain out of Ukraine. And so that was another piece, especially with Russia controlling waterways and the ability to distribute grain. That created some supply issues as well in terms of feeding people around the world.
All right, so moving off of war and oil, why don't we look at, let's move to digital currency for a minute. It seems like digital currency, particularly some of the currencies, have been dealt a significant blow to the head, from exchange impacts to FTX to other issues. We see things like Bitcoin, started out in the low 40s, well off their highs. We're now around 17,000, from the low 40s during the course of the year. Pretty big impact, a lot of concerns. This is not the end of digital currency, but it certainly has suffered some pretty significant headshots, if we're going to use a sports metaphor there. Any other thoughts on what happened this year and where that's going?
I think you could say it's not entirely surprising that there's a disruption in this area, because it's still fairly new, digital currency and the use of cryptocurrency. This is all continuing to evolve and grow. So I look at this as a significant growing pain. It's not the end of crypto. It's not the end of digital currency. It's something that's going to help, I think, make the industry better in the long run. But obviously, FTX was a big deal. They're calling it one of the biggest frauds ever in the U.S. On the outside, it seems like, yeah, that's what it was. Misuse of funds. There was things going on that shouldn't have been going on. It's going to force regulators and lawmakers to say, hey, we got to get some rigor to this before it gets out of control again. So the question is, who's going to survive all this, and what does digital currency look like going forward? Those questions still need to be answered. But I think in the long run, we're going to find that there'll be credibility to this platform, and it will continue to be used.
So we lightly paid obeisance to talking about digital currency, cyber currencies. Let's talk about some of the increases in inflation, increases in rates. We've gone from pretty flat at the beginning of the year on the Fed side for the U.S. central bank, approaching 5%. We've seen some pretty significant raises, 75 basis points. The most recent one, 50 basis points. Inflation, certainly north of 6%, but sometimes over 7.5%, over 8%. Some parts of Europe, the UK, are higher. These certainly impact corporations, corporate treasury groups in terms of their planning. Cost of capital is more. The volatility here is more on the pricing side. Any thoughts on the year in review on a time of rising inflation, rising rates?
Yeah, certainly challenging across the board. The Fed had to raise rates in light of the inflation numbers we had. If they hadn't done that, there could have been some severe harm to the economy. And so they didn't have a choice. They did what they're supposed to do. That's why the Fed's in place, to do these kinds of things.
I know we're not really going to get into second guessing them too much, but there's quite a few who say they've raised them too much. They raised them too fast.
Well, you can go back and you can look at the history of the Fed, and there's been cases where they've overcorrected or undercorrected, meaning they moved too quick or they didn't move quick enough. And history's going to tell us for sure. The one thing I can say is that inflation is coming down, which is a good sign. I still think there's more pain to be had. We're going to see more rate rises. And I think 2023, we're going to see some economic challenges as a result of that. Until we get inflation to a point where it's in a realm of what we normally expect it to be, I think there's going to be that question. Have they done too much or have they done enough?
Would you agree that they started too late? All the talk about transitory for what seems pretty clear at this point, I think it seems pretty clear they started too late. They wouldn't have had to have been so severe if you think they did the right amount, they wouldn't have had to been so severe if they started a little earlier.
I do believe they started too late. I think there was a hope that it was going to be transitory, but it wasn't. It clearly wasn't. So
saying transitory doesn't make it so, right?
Yeah, it doesn't make it so. They started too late. I think there was opportunities to do some bigger rate hikes earlier. They didn't. I think it's playing catch up now. And so potentially what could happen is playing catch up results in you overshoot. Again, history's going to tell whether that's true or not. I believe we could end up with a case that we overshoot, and I do believe we started too late.
Two other topics. We're trying to keep this podcast short. Two other topics. Onshoring, the disruption of the supply chain. There's more onshoring, friendshoring happening. It seems clear from every measure that's occurring. That's become a theme in 2022. Would you agree that that's a major theme or just a start of a trend?
I think it's potentially a start of a trend. I don't know for sure, but when I think about relations with China, the disruptions in supply chains, I think it's making everybody think, okay, did we put too much reliance on one thing versus another? And so I feel like it's a trend. I think it's a trend where we're going to start rethinking supply chain management and where we source things from. I expect that to continue in 2023 and for several years going forward.
The last item is a result of a number of the other things that we spoke about was the FX volatility. We've seen weakening of the pound, the euro. There's been some recovery in the last month or so of those currencies. Significant volatility there. That's been a more dramatic shift and impact for corporate treasuries this year than it's been in some recent years. Still same defense, but you're still taking out your insurance, so to speak, on this. But this has been a significant thing in 2022.
It's definitely been a bit of a wild ride. The dollar strengthened significantly over the last 12 months. I expect that if the Fed continues to do what they're doing, we're probably going to see some weakening in the dollar in the future. It's been an interesting year for sure. Who would have thought we were going to get to parity or with the euro? For a long time, we hadn't been, and we reached that. It's been an interesting year for sure. 2023, I expect that we're going to see some perhaps equally interesting aspects around currency.
Thanks for coming all the way down to the office with your flight delays so we could do this in person. Everyone who's been listening to the Treasury Update podcast this year and years prior, thanks for listening. We're so excited that this year we passed over 300,000 downloads, well over 300,000 downloads through the life of the podcast. That's both encouraging and exciting. So feel free to share it. If you like it, like the podcast, go ahead and rate it on whichever channel you're using. That helps identify it and bring it up to others. So Paul, thank you. And everybody who's listening, thank you. Have a great new year.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.